Good morning, fellow option traders. This is Jeff, and this is the daily scan for Tuesday, March 26, 2013. The market right now looks like it's going to open up slightly, and gold dropped below 1600. Silver lost a little bit also, and oil is at 95.25, which is starting to creep up a bit. I suppose we could take a look at a chart on that and see how it looks. Yes, it is creeping up just a little bit. Let's zoom out of here. Yeah. So we might be coming up to, let's see, the high of this year. Looks like we might be heading to that, which is 97. And again, you know, I've mentioned this before, but it doesn't really correlate 100% to gas prices. It sort of used to, but now it doesn't. I think now it's, you know, manufacturing, or at least conversion of oil to gas that is the key right now. And you know, I've had a couple of people ask me what motivates me to do this in the morning, and my answer has pretty much been that it just keeps me focused and keeps me in a routine. But I was thinking as I was about to start the video for today that what I do in the morning is I get up and I have a cup of coffee and I look at what's going on in the world and what's going on in the market and figure out what I want to talk about today. And then I make the video, and then I reward myself with a second cup of coffee. So I'm really looking for that second cup of coffee this morning. So that's what's motivating me today anyway, because I really, you know, I don't make any money off of doing these, so I'm just doing them. I'm doing them for myself probably more than anything. And if it helps somebody, that's great. I really like that too. Alright, let's take a look at what is happening in the world today. We have durable good orders at 8:30, and then we have new home sales at 10, with some secondary market, possible market affecting announcements of this Case-Shiller home price index. I think that's what HPI is, and consumer confidence. I don't have a lot of confidence right now, but we'll see what they say on their index today. All right. What happened yesterday? Yesterday on CMG and CRM, I passed on CMG because the strikes that I was looking at, and we can take a look at that, the strikes that I was looking at just did not have enough, I guess you could say, open interest on them. And I like to see a little bit more. I was looking at these April, and at 340, 345. So we can see that the open interest is right here. And I like to see it more than 500. And I wasn't real excited about this. The spread doesn't bother me too much, but this the open interest does. I just didn't feel comfortable doing that yesterday. And on CRM, I didn't like the price movement. Let's put them up here, and we'll go to the chart. I didn't like what I was seeing on the price movement. It looked like a pretty, I mean, the market opened up and Salesforce decides to just start pulling back right away. Plus, it's got this stock split coming up here, and I don't know how that's going to affect everything, so I decided to just bow out. Although it's a good way to, you know, get 4 trade-free options, but it doesn't really mean anything as far as the value of it is concerned. So I decided to pass on those. The other thing that I did, remember when I mentioned about RUT, that calendar on RUT, I actually did get in on that, and you can see it down here. And I made a video where I talked myself into it, actually doing the trade yesterday. So what do you say we watch it? Okay, ladies and gentlemen, here's my logic again on this RUT. Remember I mentioned that there is volatility indexes and all the major indexes. And this is RVX over here is the Russell, and I just wanted to show you something on the chart right quick. Okay, we are currently very close to basically the all-time low for volatility on the Russell. The low is 1362. This chart here is a 5-year weekly chart, so in the last 5 years it's never been below 1362. This is the low. We are currently at 1553, but what I want to show you here that's interesting is how easily it could pop up to 20, which it did just back in September with the look at the SPX with the little bit of a pullback that we had in September on its way up, or in February. I'm sorry, I don't know where September came from. So this is this was just like the overall market. The SP 500 pulled back, and so did the Russell at that time. And it doesn't matter what the price level it was that it pulled back, that the volatility increased. In order to get an increase of 5 in volatility, it doesn't have to come down to this level. It just has to pull back in a similar manner. So if we drop 929 down to 899, so like 30 points, if the Russell pulls back 30 points over a 1 week period or so, then we are going to get that same volatility pop that we saw back here, which is up to 21. We are currently at 15, so that's a 5 or 6 point volatility pop. Okay, now back to our trade here, the double calendar that we were looking at. We'll open this up. We have our 5% pop already in there, and we are looking at a very handsome possibility of up to $1,000 of return if this should happen, say, in 2 weeks. So if it happens here on the 16th, we're looking at a $700 return, and that's at 939, a pullback of about 20 points from where we are now. Is that right? 950, 929. Yeah, that's 20 points. So that's what made this attractive to me, and that's what made me decide that I wanted to get into it today. Live. So I'm going to execute it as 2 separate calendars, but I'm going to put them both in at the same time. I don't usually do this, but we'll see how it works out here. Okay. Here we go. We just go to advanced order and we say we want to blast all. Oh, let's see here. Let's close the slices so I can see these orders here. So I just right click on this one and say create duplicate order, and it puts it down below. And I right click on the other calendar, create duplicate order, and it puts both of them in, and now I can send them both out at the same time. And we're looking at hopefully getting mid prices. So we are looking at, let me shoot these out there. We are looking at $1,545 of risk on this trade, where we could get $1,000 back. As a matter of fact, I'm almost quite positive that we are. So I'm going to go ahead and send this out there. And we'll see what happens later today. And I will update you as soon as we get back to our regularly scheduled video. Alright, so what happened then, you can see that I added the index volatility indexes for each of the major indexes that I followed. VXD is the Dow. VIX, of course, is the S&P 500. VXN is the NASDAQ 100, and RVX is the Russell. So let's take a look at a chart on RVX about what happened yesterday during the day. And here is, let's look at the hourly over here. This is the first hour, and this is right around here was when I got in on the trade. And then it was before 10 o'clock. And then this candle starts at 10:06, and it immediately turned around and reversed. And to my surprise, during the day yesterday, actually, this trade actually was up $135. So my thinking is that volatility is going to continue to rise slowly, but I want it to be fair, and I wanted to show you what happens if volatility decreases. Alright, so I know I showed in the video about a volatility increase. So right now it's worth 71.90. But if volatility decreases, say it goes down 5, to be perfectly honest, this is what happens to the trade. And pretty much lose a bunch of money. And if volatility does decrease that much, you can bet that the price is probably going to shoot up. So if we're looking at 970 or even 980 on the Russell, if you get a volatility drop like that, it could be expensive. So I just want to caution everybody, just don't jump into these blindly. I want to be honest about this, that yes, an increase is a good thing. Oops, come on. If I do a +5, that is a beautiful thing. And if that should happen in the next week or so, I probably will get out of this. And again, you know, if you advance it a week, just a lousy week, we're talking, you know, $500, and the price is probably around here someplace. So I'd be getting out of it. All right, let's go back and take a look at everything. The actual calendars, insurance policies here, I now have 4 of them. Actually, they all did very well yesterday in the pullback that happened. And the rest of these, let's split the account up here. All right, Google dropped below. Oh, it's back in the money again, but that's okay. It's still making some money. If we look at the risk graph on that. Okay, so if we're going to sit right here, you know, we have the potential of making 455 on this. Just waiting to see what happens. We have a Friday expiration on this. And Netflix, let's take a look at Netflix. And the reason I'm not going to do the scan today, because we're in everything that's on the scan except for Apple and Chipotle. So we're just going to look at what we're already in and not jump into anything in the near future. Alright, so Netflix is behaving quite nicely. Auto scale here. Okay, so this is the Iron Condor in the Profit 10 portfolio, and this is the bear call in the spread account. So we're doubled up on that one. Let's see, and then we got Priceline. And let's see what happened yesterday on Priceline. And a little bit of a pullback, mimicking what happened in the market yesterday, pretty much. But I think we're going to, so far we're pretty safe on this particular one. We got in here after we got our confirmation. Okay, that's it And then the insurance policies, I'm not going to bother looking at those. So let's go over to the profit tent portfolio. We have Amazon. And we'll squish this down here. Amazon still continues to make me a little bit nervous. I think that I am going to put an alert in here just to let me know if I should be even more nervous. So I want this at or below. Okay, so that's below the lowest close since I've been in this trade. Baidu's behaving pretty nicely after a little bit of a nervous session back here. We do have an alert on this at 80.50. CF Industries. This one is making me nervous. This is like a march here. That could spell trouble. We're going to put an alert down here. 187, let's say. $187 at or below. Alright, and then MasterCard's doing really well. Not as good as Netflix actually in reality, but it's definitely behaving nice for an iron condor, as you can see when I compress it here, so we can see where the short strikes are. Not the break-evens, but the short strikes. Netflix also is running sideways nicely, and we looked at this in the spread account, so we're doing well there on Netflix. And then finally Panera. See where we are in Panera. Panera's behaving very well too, so we're pretty happy with those. And what I'll do probably next month for my iron condors is, well, you know, sometimes you can go to the well too often. What I was thinking there for a moment was that the ones that did really well, the ones that are really running sideways, would be the only ones that I would do this profit 10 portfolio on next month. But you know what happens is as soon as you make that assumption, then things start going bad and they start making big moves. So anyway, that's it. Pretty much the scan and a review of open positions all in one shot here. Let's take a look. I just want to show you the chart on the Russell. And what I did here was I made a box for that calendar, provided volatility stays pretty close to where it is. And if it falls within this box, it should be profitable, especially if it comes down a little bit. It should be very profitable. So we'll see how it works out. You know, if you're looking at waves here, and the length of this wave is very, very, very long, and it's just nothing but up, parabolic up. Hardly any down weeks at all, except for the last two. So, you know, it's bound to run out of gas sooner or later, no matter how good the economy looks. There's always a correction, and the pundits always find a reason for it, just so they have something to talk about. Oh, the market, you know, otherwise they'd just be saying, well, the market's up today or the market's down today. So anyway, I digress. That's it for today. Thank you very much for watching. Have a great day and happy trading.